Good morning to everyone. Thank you for joining us with our OakBridge Weekly Market Update today. Today is October 10th, 2022, and we're going to talk a little bit today just about OPEC and what's going on with the oil and gas situation. As you can see here in this slide, the average price per gallon has come down quite a bit. You can see that the price for crude has come down quite a bit, but we're actually seeing a little bit of an uptick in the price for the crude we've had a little bit of an announcement here last week or within the last little while. OPEC has announced that they are going to reduce their oil output by about 2 million barrels per day starting in November. It's worth emphasizing here that it's probably going to be closer to 1 million barrels per day. But nonetheless, even with that, it's going to more than likely aggravate the supply-demand imbalance that we currently have. OPEC is defending this decision, even though the G7 countries have pleaded with OPEC to not cut back oil supply, but to continue to make it more plentiful. But it seems like that for all intents and purposes, this is a little bit of OPEC's dig at the European countries, just with what's going on in Russia and Ukraine. And so what we're seeing right now is that more than likely, the U.S. is going to take some countermeasures. They may open up some of the reserves. They're talking a little bit about possibly reducing sanctions on Venezuela to be able to obtain some of the oil that they're producing. But bottom line is that at this time of writing, President Biden called for the release of an additional 10 million barrels in the supply reserve. The decision probably would bring exporting cartels back to the table. If it does, that would be great. We've seen oil prices fall from a high of about $122 down to about $76 as of September 26th. And you and I, we're seeing a little bit of a reduce on the price. Most of the prices are down around $4. Maybe some are even below $4 per gallon right now. But nonetheless, this is an upside risk to oil hitting above $100 again, given OPEC's decision. So this is something that we're going to be watching. It feels like to me that they're going to be able to work it through, but something that is on the table and that we're watching right now. Oil may not be the disinflationary force that we once thought it was, and as this applies to the Fed and raising interest rates, our anticipation is that the Fed will continue with the interest rates hike that they've projected at this point. So again, a little bit more volatility through the end of the year is what we're expecting. But nonetheless, we feel that markets will find their way through this and find an equilibrium based upon what's going on in the overall markets. So thank you so much for listening today. We appreciate your support. If you have questions, please don't hesitate to call us. We are more than happy to answer any questions that you may have. And also, please feel free to forward this to friends or neighbors or coworkers or anybody that you feel like might have an interest in this. And we appreciate your support. Thank you so much for helping us and for listening and for tuning in. Thank you again.